Hey, it's Cory, Boldroff, the real estate guy, and this is August's monthly market update. I do these to keep you informed, let you know with real stats and facts and what the experts are saying, where it's led up to, and where we're headed in the future. And remember, if you find this information of value, please share it, like it, subscribe to my YouTube channel, join my business page, and let me know how I can improve on this information. So without further ado, let's get into it. So what we like to do is look at the economy, how we're doing an economic recovery as of right now, look at where the housing market is, why people are moving, and what is affecting the real estate market as a whole. So I want to start off with a quote from the Wall Street Journal, and I'll read it. A strong economic recovery depends on an effective and sustained containment of COVID-19. Economics say in the latest monthly survey by the Wall Street Journal, with 91% of business and academic economics agreeing somewhat or strongly that an economic recovery depends on containing the pandemic. So when we're going to get some medicines, the vaccines, or what the states are going to do, the local governments could do as far as containing the environment and the lockdowns and the safe openings and all the different areas of how it's going to do is going to also be a key indicator on how the economy recovers. And we'll see how the economy recovering is affecting the real estate market. As you guys remember, back in March, they predicted a V-like recovery, and for the most part, we've seen a V-like recovery. It's had a steep incline, and we are on our way back up in most industries. If we look at the United States total spending of all consumers as compared to January 1st of this year, you can see we started having a slight little decline, and it fell off right when we did the safer at home policies and lockdowns. But as we started to recover, as we started to adapt and businesses started to find ways of getting in businesses, the government started deeming certain businesses essential and started allowing us to come back, we've actually seen a recovery. Now, the grocery market obviously has spiked and has grown exponentially during this time, but with other markets, we've seen a trend. So the apparel in general, they actually had a steep decline and they're actually headed back up. With healthcare, the same type of situation. Now, restaurants and hotels, obviously some are at limited capacity, some are having outdoor dining, some are takeout. So they've been a little bit slower, but they are still on their way up for recovery. Now, for arts and entertainment and transportation, things that are still deemed non-essential or not be allowed to be in business, they are having a slower recovery. But for all senses of purposes, most of the industries have flattened or have hit their bottom and are on their way back up. So that is a very, very good sign. It's a sign that Americans are resilient, businesses are resilient, and that we find ways of using tools, technology, and information to make sure that we are safe and we can adapt to any situation, even something as rare and as as powerful and destructive as this pandemic virus has been. So I want to take a look about what the top experts were saying. This was back in April. There was a Q2 forecast that was delivered, and the average was 30.8% of the top 5 major financial institutions. The good thing is the actual realized one was 31%. So they weren't too far off. They were pretty right on of the mark of what their guesstimates were. Some were a little off, some were a little under. But for the most part, when you took the average, they were pretty much right on of what actually happened. So it's good to look at that because the next one I want to show you is that those same 5 institutions, and we actually added another 3, had a forecast of the third quarter of actually having an increase in GDP. So we had a constriction of the GDP of about 30% in the last quarter. And they're actually seeing an increase of 25% in the GDP, which is a great sign. And it kind of goes to show you that these experts were pretty spot on in the last quarter. So we kind of see we can give them some value and some legitimacy of having an increase in the Q3. According to Lisa Shallett with Morgan Stanley Chief Investment Officer, she said, indeed, the worst ever GDP reading could be followed by the best ever growth in the third quarter. So this just goes to show you that even the Chief Economic Investment Officer does foresee there being a growth in GDP and it really being something that could be legitimate and accurate with us recovering. When you look at kind of the articles, this almost looks like a movie review. A lot of in economics, they use usually the powerful, words and the, more straightforward words. And this is like an astonishing rebound from Realtor.com, shockingly strong from Housing Wire, pulled something off a high wiring act in the second quarter from Atom Data Solutions. Zillow stared the pandemic right in the eye and hasn't blinked. Has been nothing short of remarkable. This just goes to show you that people were actually shocked about how much the real estate market has gone through this pandemic and pretty much almost has been unscathed. There was a time in March where we were deemed unessential. People were still, in flux and not know what was going on. The banking kind of shut down for a little bit, but we've had an amazing recovery all throughout the board. We look at what Realtor.com said, and it said, despite the crippling and ongoing coronavirus pandemic, millions out of work, a recession, national reckoning over the systemic racism, a highly contentious presidential election just around the corner, the residential real estate market is staging an astonishing rebound. I know in our market, housings are going first week on the market, above asking price. There's so much built up buyer demand. There's houses coming on, and that we just can't even replenish the inventory as fast as it's getting sold. So it's deeming and it's helping the economic recovery as well. It's really the residential real estate industry and market is leading the recovery and helping a lot of people get on their feet, stay on their feet, and make the decisions they need to make for their family. When we look at showings in North America, we went back to January, and they were increasing in January all the way up until the close down in March 17th. Then obviously in March through about April, we had a decrease in showings. A lot of people were not allowed to show, no open houses, no private showings, only virtual tours. And the real estate market as a whole, especially agents, were still in the fetal position not knowing what to do. Now, the agents that led through and used technology and used the tools that we had available and even used tools in other industry to make them available in the real estate industry and kind of did the little niches that we used to do for secondary markets, the military, where people are used to buying, never seen a setting foot inside a house and still buying the home. We brought that to the market, and now real estate agents are adapting all around and using people like myself as ways and teachers and examples of what to do. And a little credit to myself, there's actually realtor associations across the nation that are using my technique as an example of how to. In March, I was actually brought into our realtor board, and they were going to violate me for having these virtual open houses and allow private showings only. Now they've made it the norm, and they're teaching agents in my local market and across the nation on basically what I was doing and how to bring it to the market to allow everyone to, buyers and sellers, to meet during this time. Now, what we've seen in through May into July is that the increase of showings have exponentially risen. Some of it is because there was some pinned up interest and demand that was built up, but a lot of it is people are unhappy with their home. They're really unhappy with their home. People needing a different kind of home. People realizing they may want to get out of California and move into more rural and suburb areas. So we've seen a lot of increase in showing. Now, during the week of 7/7, that's 4th of July, usually that always historically goes down. But even then, we still had an increase in showings. So it just goes to show you that if you're thinking about selling, now might be a great time because the demand is huge and people and realtors are able to safely connect buyers and sellers during this time. So according to Zelman's broker survey, whether in terms of pending contract activity or our proprietary buyer demand ratings, the various measures of demand captured in this month's survey can only be described as shockingly strong in spite of the resurgence of COVID-19 cases. So even though this last month we've seen an increase in cases, the local media and the mainstream media has tried to create more fear and hysteria, the real estate market is still moving forward. People are still making housing the most important or one of the most important decisions that they need to make at this time. Again, if their house is too small, maybe they want more space for their kids to run in the backyard. Maybe they don't want to be in a city where there's a lot of congestion and they want to move outside. So we've seen a lot of demand of people moving out of the city and moving into the suburbs. People moving out of California where they've been controlled and overtaxed and overregulated, and then wanting to move out, especially as businesses have been allowed to allow their employees to work remotely. When we look at the housing market recovery index, we look at this from February 1st till now, and it combines the four components: demand, supply, price, and time in the market. Now we had an increase of 100.65, and we had a huge demand in the housing market all the way up until the shutdown. And then obviously it went down through March, April, and then we've seen since May a steadily incline to now we're almost the exact same demand that we were January, February leading up to this. So there are still some sellers that are still waiting for the pandemic to subside and for all these policies and mandates to be lifted. But in general, most people are finding ways using tools and technology to put their houses on the market safely, show houses safely, use virtual tours, use dollhouse effects and realtors going out and showing their houses with their cameras and putting people together. According to Quicken Loans, the pandemic has not stopped the consistent home price growth we've witnessed in many years. And so since the 2007-8 crash and we hit the great recession, we've seen a steadily increase in prices and appreciation in home values. That has still steadily increased through this time. I think most markets are in between 5 and 8% from the start of this year till now, and we still see that demand growing through the full rest of the year. When we look at the major institutions and the major buyers, Search Homes and Fannie Mae, Freddie Mac, we look at them, the large range of projections on future home prices, we still see from year over to year date. So the next 12 months, a lot of the major institutions are seeing or are calling for an appreciation anywhere from 2 to 4.5%. So we're still going to see an appreciation happening through next summer, at least according to the most experts. And I can tell you, based on the main indicators, the interest rates, buyer demand, built up equity, the foreclosures at an all-time low, cash out refis at an all-time low, we see that there is going to continue to have an appreciation through this year and maybe even next year. Now, we don't know this for facts, so no one has that crystal ball. So I would say if someone's thinking about selling in the next couple of years, now is probably the best time to sell just because there's lack of inventory and we don't know how many sellers are going to come onto the market in this next 12 months. Now, one thing I do want to point out is Zillow. They actually own CoreLogic as well and a couple other appraising sites. They're basically kind of trying to pinpoint the market and control the market since they got into the home buying process. So they're going to go and tell you what your house is worth. And then when you try to look for maybe, go on a website and look for your home evaluation, they're going to be able to capture that information and try to go to you and say, hey, the housing market's crashing and you need to accept a lower offer than you were last year. So that's some reason why I think they're so low and why CoreLogic last in May, I think it was March or May, they estimated that it was going to be a 6.8% decrease in appreciation or depreciation over this pandemic. They've since stepped back and said, okay, it's only going to probably be a negative 1%. But again, there's maybe a hidden agenda in their estimate and their forecast. But they're one of the only two that actually see a depreciation or call for a depreciation. To go into, this is what basically CoreLogic came out and said. Last month's forecast of a 6.6 home price decline through May has been revised as projected unemployment rates through 2020 have showed improvement. The recent rebound of home sales suggests the pandemic did not derail home buyers who continue to be motivated by historically low rates. This, coupled with the declining supply of homes for sale, could shield home price growth from impacts of the current economic uncertainty. As a result, the last forecast report, home prices will decline a moderate 1% from June 20 to June 2021. So you can see they're already stepping back. And again, CoreLogic was bought by Zillow, so there's one and the same as of right now. The year over year change in listings. So that's something that we really have to look at. This March, We've seen a decrease in pricing, especially when no one was allowed to come on the market. The realtors were in the fetal position. People were scared of what was going on. Government shut down things, deemed it non-essential. So we had a decrease. But you can see from year over year, we're still under what we were last year. We had a little spike in the beginning of the month of July because I think a lot of people were thinking that we were going to come out of the safer at home, and then we went back into it in a lot of states due to the spikes. But you can see that new listings are not coming on faster than they're selling right now. And that's why the overall listings are still in a decline, because we're just not pinning up those listings. Houses aren't staying on the market for more than 30 to 60 days. Unless, caveat, you have a really bad realtor, you're completely overpricing, your home's completely distressed, or you have a really unique location where it's not have that big buyer demand. According to Move.com, the summer home buying season is off to a roaring start. As buyers flooded into the market, Realtor.com monthly traffic hit an all-time high of 86 million unique users in June of 2020, breaking May's record high of 80 million unique users. So people are coming out of the woodworks. Again, if you're unhappy with where you're living, you're really unhappy with your living. Maybe you need a bigger home. Maybe you need space to send your kids outside and have a safe environment for them to play in. Maybe a pool is more important. Maybe moving out of the city. There's so many different reasons why people are looking to move right now. It's building up this demand. And usually it's from the time they start looking on the internet, it usually takes 3 to 6 months for them to become active buyers. As of right now, it's almost instantaneously. People are actively, when they first look on the internet, they're actually going out and looking at homes and trying to buy them, because a lot of them are sold before they even try the next day. When we look at year over year purchase applications, we saw a built up demand happening through January, February into March. Then again, the pandemic closed the shutdowns, closed applications. A lot of the bank and the secondary market were on hold, and so they decreased. But now we're at 11 straight weeks of year over year increases, meaning that people are trying to purchase a home. People are trying to get approved to purchase a home more than they were last year. So this pandemic has not slowed things down. It actually, in other words, went the other way and actually sped things up and increased the demand even more. According to the National Association of Home Builders, of American adults considering a future home purchase in the second quarter of 2020, about half are simply not planning it. They are actively engaged in the processing of finding a home. That is a significantly higher share than the comparable figure of a year ago of 41%, which suggests that COVID crisis and its accompanying record low mortgage rates have converted some prospective buyers into active buyers, which is basically kind of what I was just saying. Of people usually start to look and they slowly start to plan in it. Now it's go, go, go. On a little caveat, there's 100% financing available for first-time homebuyers. There's down assistance payment programs, closing cost assistance programs. There's lots of different programs to help first-time homebuyers or someone that has not owned a home in 3 years to get in a home almost with no money out of their pocket. There's also really aggressive bank programs that are available and non-qualified mortgage programs that are available. Basically bringing back those programs where you don't need the traditional W-2s and tax returns, because the banks know that right now it's in flux and last year might not be consistent with what's happening on right now. So they're allowing other ways for people to get qualified and be able to buy a home, because buying a home is the most biggest key indicator to building true wealth in this country and financial stability. I want to look at a couple surveys done by Realtor.com. In April, they did a survey of what they said they need to move in their next home. Number one was more interior space, more outdoor space, updated kitchen, and better technology. Compared to a couple months later, in July's survey, the top 4 reasons people are actually moving is moving for interior space or desire to own. So a lot of first-time homebuyers, a lot of millennials, are moving and saying, you know what, I want to own. I don't want to be beholden on a landlord. I'm paying the landlord's mortgage. Might as well pay my own. This has been the best all-time high of most affordability, because we're at an all-time record low of interest rates. The 30-year fix went under 3%. I believe it's under 2.75% as of right now, which is the lowest it's ever been in the history of our country. So this has made it so people can afford more. Or for a $500,000 house, it's about $2,500, which you're probably paying more for in rent. So if you're renting, please reach out to your realtor or your mortgage consultant and see if you can own a home cheaper than you're renting, because I promise you in most cases that is the case. A lot of people are moving from the city to the suburbs, and there's actually data to suggest this and prove this. And people are looking for more outdoor space where people are okay living in condos, townhomes, and homes that are right on top of each other with no backyards, and HOAs that have small backyards. Now people are moving out where they have their own backyards. There's less people telling them what they can and cannot do, and getting more control of their personal residence and their personal life. When we look at who's planning to buy a home due to being able to work remotely, we're looking at 70 or 63% of people are looking to move a home for that reason. So they're no longer have to be close to their work or look at deal with traffic or how long it's going to take for the commute, and more people are looking to move outside and have more space, but also space that they can work into. Like, I know my house, there's no way with 6 kids I'm working inside my home unless I get 1,000 square feet bigger. We're looking into either doing that or building onto our home. So again, if you're looking to build like an ADU, a guest unit, I'm an ADU specialist. I can help you out. Sorry, I have to do my ploys every once in a while, or my plugs every once in a while. So going on to the next thing, we look at a surge in urban high-end listings. So across the nation, a month-over-month increase. People are looking to put on their high-end homes in their urban areas so they can move out of the suburb areas. Also, we're seeing a high demand in the second home areas like Palm Springs, the Hamptons, around the beach areas, around the Santa Barbara areas. People are looking to sell their $1 million homes, multi-million-dollar homes in Beverly Hills, and move out to the outskirts where they have more room, more space, and they don't need to be in those inner cities so much anymore. Johns Burns Consulting, as states, cities, and counties around the country slowly reopen, we predict the Great American Move. For safety reasons, financial prospects, life change improvements, personal comfort, and employment, we expect a surge in household and business relocations over the next couple months that will provide new strategic opportunities for the real estate market. We see a lot of buildings, maybe malls and suburb areas, being converted into townhomes and condos, or maybe PUDs. But there's a lot of stats and a lot of data that's showing people are moving out, and America is probably going to change the way it looks today as in the next 5 to 10 years. We look at the Q2 2020 U.S. home sales report. Home sellers nationwide realized a gain of $75,971 on the typical sale, up from $66,500 in the first quarter of 2020 and from $65,000 in the second quarter of last year. The latest figure based on median purchases and resale prices marked yet another peak level of raw profits in the United States since the housing market began recovering from the Great Recession in 2012. So again, what it says is that if people are looking to move right now, they actually have the means to. They have a lot more built up equity than they probably even imagined. Their houses are worth more than they thought it was. Even if you bought in 2012 to 13, your house is worth exponentially more than it was. Even if you bought at the peak of 2006, 7, and 8, your house still could be worth more, or you could have a lot built up equity than you think. So this has allowed people to do the moves that they want to, maybe move and invest into a business or a home business, or start something, one of their hobbies that they can turn into a business. I know many of my people that are in the film industry, they've looked for other means of making an income during this time, and they use their skills and their tradesmanship to do things like that, and their businesses are growing using the internet and using their relationships with people to get them to buy products instead of buying from the Amazons and the Targets and the Walmarts of the world. In end, I want to end off with the real estate market is super, super hot. We have a low crisis level of inventory. In most markets, we're seeing an increase of home prices even from May, March, April, June. We are seeing houses increase in prices. Houses are moving very, very quickly. So make sure you go get pre-approved first. Make sure you know what you can afford. And then when you're ready to look, be ready to put in offers and get ready to compete, because they're getting into multiple bids. Something that I might suggest is looking for maybe a distressed home, because those aren't as hot. And then we can use programs like the Dream Home program, or there's like a 203KB with his FHA loan, where they'll actually give you money to fix up the home. So there's different ways that you can turn a distressed home into your dream home or into a turnkey home. But get ready to compete. Get ready to make sure your agent has a lot of experience dealing with multiple bids, knowing how to have a strong offer put in, and make sure they can prove that they have a track record of getting escrows closed, because all those things really do matter right now. So if you guys have any questions, if you want to know what's going on with your market, your neighborhood, let me know. If you want to see about getting pre-approved, let me know. I have some great mortgage consultants that can help and work with you. And if you're ready to go and you want to use my services, we can help you from San Diego up to Santa Barbara. We got boots on the ground that really know the individual markets, and then we use our expert negotiation skills to make sure that you get the best price and terms. I hope you guys find this useful. Again, if you do, please like it, share it, comment on it. Please subscribe to my YouTube channel, Cory Boldroff, the Real Estate Guy. Facebook, Cory Boldroff, the Real Estate Guy. Hit me up, let me know. I do these to be of service to you guys, whether you guys are looking to use me or not. Please use this information to make the best educated decision for you and your family. Till next time, guys, we do these every month, so look it out for next month's, and let me know if you guys have any questions. Thank you so much for joining.